today let's talk about market outlook. Okay, where is the market now? What is probably going to happen in the coming weeks or months, and why I think that. Okay, again, these are just my thoughts. Some of it is based on analysis. Others are based on the irrational logic behind how people's minds work when it comes to the economic market. All right. So let's look at this. Okay. Now, if you remember, in March, the Nifty had crashed from 12,500-ish all the way to 7,500, right? So today, this is what the Nifty looks like. Okay, we closed at 10,900. Actually, we closed at 10,920-ish, but because the last 15 minutes, they take an average of the last 15 minutes for the close, it shows 10,901, but we actually closed higher. Okay, Reliance closed at 9,916 or 17, but it shows 9,911. The Bank Nifty closed way high. Again, it shows much lower. So this is the chart that we should start with. Okay, this is the day chart for Nifty, and you can see from March 7,500, it's been going all the way up, and it's been in this channel. You will notice that many times it has come tested below the moving average, but it has always gone up and has tested highs. This is a this green candle, the only green candle above the line, is the infamous day when there was an announcement in the US that probably war with China, and the next 2 weeks was the market went down to 8,800, and then again it shot up. Okay, so this is what the market looks like. Now, if you look at this, I'll give you some trends here. Okay, you can see that there is a key support now in the 10,500 to 10,550 range. Okay, you have the moving average there. You can see that the trend line, if you actually work out this trend line on the charts, which I have done, somewhere between 500 to 550, there's a huge support. So the chances of the Nifty going below that is going to be very hard. It has to take something drastic for it to fall below 10,550 as of now. Just want you to know that. So where are we looking at next then? Okay, and here's the thing. This you see this black line? That was the 200 moving average on the daily chart. That means for the last 200 days, the average of the Nifty would have come to about 10,870. And yesterday we broke it for the second time. We actually had gone above that, or I think 4 days before, but we closed above it for the first time. You can see that this red candle here has actually touched the line, but it closed below it, and then there was 3 days of falling. But today or yesterday, we closed above the 100 moving average. Now that is very important. Okay, when you see a candle that closes above a moving average, very likely then the trend is still going to be bullish. Okay, this is something that is very interesting. So where is the Nifty probably going to go next? Okay, very likely we're going to go and meet the top of this trend line. You see this trend line, the purple lines, the trend line on top, and that is a key resistance about 11,200 to 11,300. Okay, just for your information, that is probably where we're going to go within the next, I would say, few weeks, but sometimes it could be few days. All right, I don't know the timeline, but that's where we're going. Okay, that's where we're going to test it. We got to test it. You can see here that 7,500, it tested the trend line. It couldn't break through. It came down. It tested the trend line at the bottom. It went up again. It couldn't break through. Went down. Tested the trend line below again. Then it stayed somewhere in between. It's above the moving average. It hasn't broken down the trend line. So the likelihood is that it will test the trend line on top again. When it tests the trend line on top again, if it crosses above and stays above. Now here the situation was, there was some really bad news. Okay, this was, I think, June. No, this was May 29th, if I'm not mistaken. May 29th or something like that. Very bad day. That was a very good day. It was a Friday also. Okay, but the Monday after that, the market just crashed because of those bad news. So bad news or something really bad, adverse news could affect, but I think for the most part we're looking at going up. So basically the Nifty has come from 7,500 to 10,900. Okay, it still has to recover the 12,500 mark where it started falling from. Now, if you look at other global markets, you will notice that most of them have recovered their highs. Nasdaq, the Dow Jones, all have recovered from where they fell in Feb, and now they're above it. But we are still kind of behind. In fact, we have only retraced about 45%. 7,500 to 10,900 is only about uh, roughly 45%. We haven't even gone half the way, okay, of retracing. So we are lagging, but the likelihood is we're going to catch up. Okay, the likelihood is we're going to catch up. Now, this is very funny. People ask, why is it that the markets are going up when coronavirus cases are spreading, and there's a whole lot of issues coming up. The economy was shut down. There's lockdowns. But I want you to know all of that was kind of factored in that huge drastic fall. Okay. You remember when the Nifty had fallen from 12,500 to 7,500 in February, March, there was hardly any coronavirus cases in India. Okay, so what they were factoring in then was, first of all, economic downturn, possibility of the pandemic hitting India, and then even possibilities of lockdowns and all of that. Okay, but today we have possible. Now, see, all of those were possibilities which were not realities yet, and yet the market fell. Now, what are the possibilities going forward? Possibilities of finding a vaccine, possibility of reducing the curve eventually, and so all of those are the possible. Now we're out of the lockdown, or kind of somewhere stuck somewhere between lockdown and semi-lockdown, or not so much lockdown, and companies are starting to produce again. IT companies have diversified. They've gone to work from home. Reliance has gone from being a petrochemical company to becoming a conglomerate with markets and telecommunications and all that. So you will see possibilities of companies diversifying to manage the pandemic. And all of these probabilities are telling us we've hit bottom, we're going up. How fast we go up and how fast we reach where is a different issue. But the thing is, the markets, or the people with the irrational logic who buy and sell on the market, they are factoring in the fact that this is the probability or the possibility that will happen 1 year from now, 2 years from now, and we got to enter now. People who don't think that way, who think, oh, we're right now in the middle of a coronavirus pandemic, will never enter the market. They're expecting the market to go back down to 7,500, 6,000. Neither the technical charts indicate that, nor does this thinking. Okay, so I want you guys to be aware of that. If you are still feeling, hey, market, I'm not saying there won't be any corrections there. Of course, there are corrections. If you look at the chart, you will see that there are red candles on the daily chart between. So there are corrections. But the trend, if you look at this has been an upward channel, and it hasn't broken the upward channel. So 10,550 is the key support. We're going to probably test 11,200 in the very near short-term future. Okay. So those are things that I want to talk to you about the outlook, okay, market outlook. So if you are holding stocks or trading, think a little bullish. Think also there will be corrections. Don't get into the psychology of getting stuck in a trend. Okay, always go with the market trend. If the market is saying it is going bullish, we also will go bullish. If the market trend analysis shows it's bearish, we will also go bearish. Simple as that. So first, I think it's important that we understand the psychology of the market.